Let's talk to Craig Erlam. He's the Senior Market Analyst at OANDA. Morning to you, young Craig.
Good morning.
Right, so let's talk about the great British pound against the US dollar. We've talked about this over the recent weeks. A big failure at a high price area and one-way traffic ever since. What are your latest thoughts?
Yeah, it's playing out very nicely. Like you said, I think we have spoken about this a couple of weeks, 2-3 weeks ago maybe, because we were talking about that big double top which we had, and that was a very bearish signal. And one of the things I was dubious about with it was whether it could reach that price projection level, because when you're talking about a move from 137 back to 130.50, I mean that's some projection, right? In a pair that was seemingly so one way. We always see corrections in these markets, but that's quite a sizable correction. So we were looking at this and we were thinking, right, this is where it's telling us it could move back to, but let's take this one step at a time. And I think I labelled it out. We had the 200-233 day moving average band. That was going to be step one. That was achieved. We saw some consolidation around those levels, and we finally saw, after consolidation between the bands, we saw a break below about a week and a half, 2 weeks ago. The next test was going to be that kind of 133 level, historical level of support and resistance. So that was always going to be the next point. Middle of last week, start of last week, we started finding support around these levels, potential for a bit of a correction. And we even saw some, like for example, the MACD histogram in the middle was losing some momentum, so potentially suggesting we were going to see a bit of a correction. We broke through the bottom of there at the start of this week. We look at the other two indicators on there. We've got the stochastic, that suggests momentum is still okay. You look at the moving averages on the MACD, really very much hanging near those lows. We're not making new lows per se, but we're very much almost flatlining at that point right now. So we're not seeing necessarily divergent signals apart from that histogram. So that suggests to me that there is still potential for this to continue to drag lower. Whether we hit 130.50 before we see a bit of an upward corrective move, I think that would be quite a sizable move on the back of what we've already seen. But momentum fundamentally is very much with this. Everything we see right now seems to be pound bearish. You look at the changes in the Bank of England recently, not raising interest rates in May. The data's not been great. The inflation data's coming down. We've even had recent comments from Mark Carney suggesting that they could provide stimulus for the economy in the event that Brexit discussion negotiations don't go well. Brexit negotiations aren't particularly making any strides recently, so that's always negative for the pound as well. The dollar is very well bid at the minute in general against any currency. You look at the potentially, again, the vast majority of countries, the dollar is very well bid. There's potential for another 3 rate hikes this year, taking it to 4 in total. You've even seen a bit of the safe haven flows for the dollar. So you'll see the US Treasury yields are coming off their highs because, again, these safe haven flows, the situation we've got in Italy right now with the political situation, the potential for new elections in the summer. We've got a potential vote of no confidence in Spain. This turmoil that we're starting to see arise in Europe, it seems to be playing into the dollar as a bit of a safe haven, which again seems to be benefiting this pair again. So I guess the point here is we are taking out levels one at a time, and we may see some more corrective moves in the meantime. But I think that 130.50 is now looking very feasible, which again, given the fact that we've come from 143.75 and everyone was extremely bullish at these levels, it's some going.
Well, it was a one-way ticket earlier this year, wasn't it? You know, everyone was upgrading the cable to sort of 148, 150, big headlines. It was bid only. And here we are.
Well, I think we've got to remember that with these things, we've got to determine what is short, medium, and long-term projections. In the long term, I do think the pound is probably still bullish, and I still think you could see these kind of 145, 150 levels, because at the end of the day, if come later this year, we've got a Brexit transition deal sorted, we've got an outline of a trade deal sorted, we've got an idea at least of how to resolve the Northern Ireland border issue that both sides agree on, then there's no reason why cable can't be at 150 after that point. But again, short, medium, long term, and right now we were very much craving a corrective move, and the dollar was also craving a corrective move, and that's what we're seeing now. I'm not necessarily convinced we can go below 130, but it'll be very interesting to see what happens when we start to approach those levels.
So an absolute key level. On that note, Craig, thank you very much indeed.
Thank you.